Are we live?
We don't. Why not?
Yeah,
Robert,
you're live.
you're very dark. All right, welcome to Wall Street Beats. I am Ben
Well,
Bry. That is our man Jeff Mackey from San Diego, and Robert Marson from Philly. Let's get it going today, guys. Will stocks ever go down again? That is the question on mind. we got oil getting. We
what's
got
that
oil getting.
mean? What's going down mean?
Yeah, I don't know. Like it's when they don't go up, I guess would be the definition. But so Robert, you're just saying something interesting. You said, "Hey, I don't have any hedge against oil going down." Uh, do you view this as a sustainable move lower, or do you think this is just a reaction?
In oil?
Yeah.
Yeah, buddy. I was hired in 1988 to be the energy analyst for Miller Anderson and Sherritt, and I still haven't figured out how to forecast oil prices, buddy. So,
Fair enough. Fair enough.
and I've been trying for 40 years to figure it out. So,
It's hard. They say that they say that's a very difficult game to play. So okay, well, what do you?
I mean, obviously, when the strait opens up and there's a permanent solution, oil's going to have a healthy correction. I do believe, like you, that oil stays higher longer. I believe there needs to be a massive restocking process that'll keep oil in the 80s rather than 60s. So I'm a secular or cyclical bull for the next 2 to 3 years for natural gas and oil. But I on on any kind of short term news, it's hard to forecast this. It's a beast trying to figure out oil prices in advance.
What what about what else were you looking at? What are you thinking about right now?
Well, in order to try to get a little bit of hedge for all my energy, I thought that consumer stocks would help out a little bit and not be like tech or energy. And I bought a little Abercrombie last week in the 74 range, and then a little more yesterday at 76. So it's about a 1% position. That's more like a small starter position for me. It's not a lottery ticket because it's a real company, but that's what I did. Their numbers were fine. They're going to buy back 5% of the stock this quarter. They bought back 3% 4% last quarter, and this is really a financial engineering story. I have this thing about 10% double digit revenue growth, right? And you can say, Morrison, what are you doing buying this piece of crap with 2%? You're a hypocrite. Well, it's 2% growth, but if they buy back 10% of their stock, it's 12% revenue per share. And I'm willing to find a company that can, through programmatic trading, organic revenue growth, and share repurchase, programmatic acquisitions, not trading, and organic growth and share repurchases generate double-digit revenue per share growth. And not too long ago, Abercrombie had almost 70 million shares, and they have 40. They're on path to get to 44 this year, and next year they'll end with 40 if they keep buying back stock. See, they know nobody on Wall Street likes their stock, or investors don't like it, even if the analysts do. So they're buying the hell out of it. So it's if you take the 75 that I bought it at times the 40, and take out the net cash. I want to say the enterprise value was down around 50% of sales, and it was about 3 times EBITDA. So I'm looking forward there and giving them 6 more quarters of credit for material share repurchase programs. But I think that's going to happen unless we have a really rip roaring recession and the economy shuts down and consumer purchases shut down, which is not a 0% possibility. But so I'm long Crocs, which I've been holding forever. The mistake I made there was not buying it after it went down on its first or second bad quarter. It did get into the 70s, and I'm in at par, and now it's back to around 120. So still a very cheap stock. So they're the two retailers I own as deep value investors, in this market.
Jeff, do you endorse those? What do you think about those, Mister
Yeah, you know what I
Retail?
do actually. I love the reaction that we're seeing in Abercrombie today. Now, it's a bonker stock. It's dislocated so many times over the last year. You look at that. Options were
Yeah.
priced in like a 17% move. You can't. It's a tough trader unless you're just going to take a nice small, like a common position and just ride it, and that's the best way to trade it. I listened to the call this morning. um, it's they were fine. You're talking about a company that's now at 10 times earnings. Everyone's trying to figure out how much they were over earning for the last 2 years. We're getting close to an answer on that. It turns out they're just a pretty well run company that is generating cash. And to Robert's point, they're buying back just a dump truck full of shares. They don't have to be that good at 10 times to come up with a reasonable story. It's well managed. We had two stories in kind of the maybe different sections of the mall, but in the mall today, Lulu settled their dispute with their founder Chip Wilson. That's another company where it was just kind of a gang that can't shoot straight. Both those stocks were down 40% for the year going into this week. You don't have to be great. What you need for the consumer stocks is just you don't necessarily need gas to plummet. You need it to stop going higher. The break lower in oil is convincing enough that you know what, maybe we get a pause in them going higher, which is why you're seeing airlines do well. You're seeing people have been waiting for the retailers to fall. Not no pun expected or intended on the Crocs pun, but they've been waiting for the other shoe to fall on these consumer names for quite a while. And that's what the first and second quarters are all about, is kind of lowballing expectations. You're down 40% for the year. Your expectations are pretty damn low. I think it's bullish for Lulu that they ended this kind of pointless proxy fight. They're giving Chip Wilson two board seats, and I think what it does is it obviates the next couple quarters. I think the next couple quarters are going to be terrible there, but at 7 times earnings for a stock that was $500 a share 3 years ago, it's that's fine. I think that you're getting into a situation where you can look past it. What we're seeing is a lot of the laggards in terms of the reactions on the stocks are doing pretty well. So your worst case scenario isn't coming in. The good companies, I thought Target's quarter was fine. I thought Walmart. I mean, if I hear one more person say, oh geez, Walmart said the consumer is price conscious, that's Walmart advertising. If you're the low price seller of every discount product on earth to the entire country, the consumer is always looking for a good deal as far as Walmart's concerned. Their entire damn business model is based on that. So that wasn't them warning, and that stock just got battered for pretty badly for a company that is reporting relatively boring, but that was because it's expensive. But the reaction, something like Target, which also sold off, everything that had a good year going, kind of coming into numbers, has been selling off. The good ones have been bouncing back as people just kind of adjust to it. So you're seeing just, it's the anti-semi sentiment in everything consumer. But some of them are just kind of too cheap to ignore completely. It doesn't mean you have to get long them, but you should pay attention when the Abercrombie start to turn. They're a good company. They're a good company to trade at these kind of multiples. You would expect them to be a little bit of a shambling disaster, and they're just not. China was strong for them. That's another good indicator for Lulu in a couple next week. Victoria's Secrets is way off its highs. You got a lot of names in the mall that have just been absolutely tortured, and so it looks pretty good. And it's really hard to come up with any of these retailers that's come out and said, you know what, the consumers absolutely sucked. I realize what they're supposed to do. I realize what sentiment has been. I realize gas prices are high. People are still going shopping. So I kind of, if you're going to give me a choice of who I'm going to listen to, I'm probably going to listen to the stores who tell me that consumers are still going out shopping and spending money. Maybe they are a little more price aware, but that's just a nuance. People don't shop when they actually feel super poor and they hate everything. So this whole, it's not like, I'm going to go spend some money. I'm pretty sure the world's collapsing. I'm going to be jobless tomorrow. Let's go to the mall. It's too much is maybe made of store traffic at the tops, but at the bottoms, it's a pretty good tell. The three of us have enough gray hair, including you, Ben. Sorry, man. Life goes on. You get old, but we've seen bad times in the mall. Plenty of parking, lots of sales, and that's not what they look like. At least not around here, and not to the limited number of places I've traveled. But it just seems like a consumer that's kind of slugging along and doing fine. If gas prices, even if in a scenario where they stay higher longer, I always use gas prices as a proxy, but obviously that affects the entire supply chain margin of any of these retailers, from shipping to sales in the Middle East and everywhere else. But the overall, they've kind of handled the blow, and so I'm kind of bullish on the consumer space right now. I mean, I think they look pretty good. I think Target's set a nice base and moving higher. I think there's a lot of low hanging fruit, and there's just good multiples. So why not?
Target's a good example, actually. Jeff, you came on my podcast in early December, and we were talking about to Target, and you're the guy who we love to talk to Target about, but like, $85, $84, it was like so left for dead. Well, I don't think the consumer is massively better than it was back then, and the stock's up 50%, right? So I think to your point, in Robert being involved in some of these bottomed out stock, like consumer stocks, those are names that you can get involved with here because nobody wants that stuff at all. They want Micron, which
No.
goes up in a goddamn day, and all this stuff where anything that's tied to GDP, tied to the middle consumer, seems to be tied to rates. Rates might have just bottomed out, or bonds, I should say. Like rates could go lower. That's going to help the consumer. Oil going down can help the consumer. And there's no positioning there, right?
Right, and these things get cheap, and really, what you're looking for then is less of a macro call than is management just out of their minds? Are they just going to destroy capital? Are they lighting money on fire? That's why I brought up Lulu before. They went from a proxy fight with a founder who kept telling them to stop doing stupid things. Basically, I mean, it's Chip Wilson's a controversial guy at Lulu, but he made really solid, kind of reasonable points that we need people that are more aggressive in terms of who this company is and what we want to be. That makes sense. Lulu fought them as hard as he could for ages, and then they finally kind of conceded. That's a sign of life. Target, they had so much low hanging fruit, and just in terms of reorganizing the stores, they've done that immediately. I saw a downgrade a couple of weeks ago where they said, "Oh, they've taken out the low hanging fruit." It's like, what? Management doing the smart things that they can do first and fast, and it changes the store experience immediately, is not a negative. Like, that's not a bearish thesis. Oh, it's all they did was improve the store experience right away. Uh, that sucks. What an idiot. I mean, it's the
I'm
concern
not
we're
going
seeing.
there again. I'm not
Yeah,
going
I
there
know.
again.
Better short them. They're just going to keep doing the easy, smart things instead of becoming a semiconductor company or some damn thing. If you believe that people are going to go to stores at all, Target at still 15 times earnings is pretty good. And they turned in the quarter that you want. I don't want them to be piling up EPS in Q2 and Q3. They've got a lot of stuff they can do. And what I see when I go into stores is better traffic, better organization, new product, and a lot of ways that they can still improve, without really doing things. They're hiring from the outside, which is great. That's also what you want to see. You need a little blood in there. So a new CEO can take that stock to 200, and you're still really not that expensive. And in a world where kind of, yeah, Walmart can outspend them and they can deliver in 3 hours and they can do a lot of stuff Target can't, people still go to stores. It's just go to a mall. You'll see people there. They're not all just crazy homeless people. They want to be at the mall. It's so these are companies that just have some room to run. They might not be the exciting rocket ships. They might not get your wife off your back when she says, "Why don't we own Intel? That seems like we should have bought that." But it's probably should have, honey. But we're gonna do okay on what we have.
So, by the way, I
Um,
do have to admit, I did when I was looking for more consumer exposure for this oil hedge. I did circle back at Kevin Plank's 6 feet Under Armour, and I just couldn't do it. So I'm sorry. I looked
No,
at
and
Abercrombie. I looked at Abercrombie's valuation, and I said they're far better than Under Armour on executing. They have a much better balance sheet, and if they traded at the same EV to sales ratio, I think I figured Abercrombie would be like 105, and I was buying it at 75. So I
right.
just couldn't go there, right? For some reason, it has this enterprise value to revenue and potential earnings power that always seems too high for its potential in its turnaround recovery. So I don't get it. I mean, the stock should be half its price with where the fundamentals have been the last decade, in my opinion, and then it would be worthy of considering as speculation, but not
Yeah.
not 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 here.
And that's kind of it's for all the K-shaped discussion. And again, you return to what consumers are supposed to be doing. And it's such a pat theory to say, oh, rich people don't care and they're out buying fancy stuff, and poor people are not buying anything or buying really, price conscious stuff. That's not really happening. It really kind of consumers are being more picky in terms of they don't want to go to Under Armour. Like,
Right.
they don't like it. Plank's actively destroying value. They don't have good brands. They don't have good product. It's really hard to sell stuff when you're positioned that way.
Right.
But we've sold off enough in the XRT. God knows it's marked enough time that you don't need to be brilliant in a lot of these. Everyone's crowded into the same names. Costco reports next week. What are they going to say to justify 50 times earnings? I don't know. I'd rather own Target. I'm long both, but in terms of what I'm speculatively long, I'm much more apt to lean towards the Targets of the world. I think you have to pay attention when Lulu starts not doing stupid things. At $500, they had to continue to reinvent tights for women every quarter. At at $120 or $130, they pretty much just have to stop shooting themselves in the foot every quarter, and that'll be good enough for a while. And so when you can kind of identify what stores have to do, Abercrombie had to stop the bleeding in terms of their comps. They did an okay job with that, and they had good logic for why they didn't. China continues to be pretty strong, and America's sort of cromulent. It's fine. The consumer's not crashing, and they were priced for the consumer to crash. Every rally in retail's been sold like crazy all year, and it's they're just not that much worse as an industry than the rest of the gang you can buy out there.
Yeah, I mean, Walmart finally stopped going up. Like the thing was just an absolute beast. Like until I guess the last week. Were their earnings last Wednesday? Last Thursday? When was it?
Yeah, I think it was last Thursday. And they were
Yeah,
and they
yeah,
were perfectly fine. They were perfectly
yeah.
acceptable, and it's one of those things where they wrote the headlines after they saw the stock, and they said, "Oh, they were cautious." Now, if you're a mass merchant discounter in a world where gas has been going up and is what 50%, 20%, however percent higher at the pump than it was. If you're Walmart, of course you're going to be cautious, and of course you're going to, talk your own book a little bit and say, yeah, the consumer's cautious. They're looking for a good deal, which is why more of them are coming to Walmart. That was the entire kind of phrasing and spirit of what they were saying. At the same time, they're really good at allocating their capital. It's the same argument as you get at Amazon. If they were chucking a bunch of capex at stuff that didn't work, that would be a problem. The fact that Walmart is actually leveraging their stores to do a ton of deliveries in like 2 hours. So, it's you can buy groceries faster than you get a pizza delivered. That's pretty damn impressive. That's pretty smart levering. And they're getting membership dollars from that, which is huge margin. You're talking about it like a 4%, 5% tops, kind of like discount is not a big margin business. So if you're going to a system where you're selling memberships and you're selling ads and you're making money online, that's a big deal. They're $150 billion run rate online right now. Walmart is. They're now number two to Amazon, and in third place is Who Gives a Shit. Like they're that far ahead of sort of everybody else,
You
and
know what?
growing it
Those
fast.
two. Look, I do some grocery shopping on Amazon, and it's fantastic. If they're anything close to that, I haven't used it. Like it's great. I mean, in it, you are right though. Like, I mean, Target is a far like distance from those two guys, and when it comes to some of the stuff, they are real time, same day discount price. It's impressive.
And
All
so
right,
and the way Target counters is they make better stores. It's and they got away from that for a long time. They got political, they got confused over what their mission is. A clean, nice place to shop. The moms are back at Target. You go there and you see moms with their family and they feel safe and they buy their groceries and oh, here's a cute blouse. You'll never guess how much it cost. Only $30. What a deal. That's the entire business model. So to the extent that shopping in stores is going to be a thing, they'll get more than their share out of the discount world. And speaking of capital allocation, I don't want Target dedicating just tons of money. They're going to spend 5 billion this year on capex. I don't want that to go to e-commerce. It's we'll figure that out when we get there. We can fix our stores right now. Walmart has better boxes for what they're trying to do. Target had kind of a lot of stuff that they can improve because it for them it flows from traffic right away. They're not selling memberships. They're not doing any of that. But that's reflected in the multiples. If they were all at 50 times earnings, then you'd have obviously, a short would stand out like a sore thumb. But Target's got a pretty good discount to those guys who, it's if you compare them to Costco with their membership plan, Walmart with now kind of different spokes that they're finally putting on this system. It's there's a pretty good discount built in there, and that's sort of what the multiples should look like. Of the three or the four companies that we mentioned, I think Target's the one with the best chance to go higher.
It's been pretty good. It's been a nice run since last November when, I mean, it's funny because I didn't think the sentiment for consumer could get worse than it was then, and apparently it did somehow.
Super is. Super is. Nothing like a good endless entanglement in a foreign country to keep sentiment a little tempered, but it's working out.
Yeah, Robert, you got anything else that you're looking at that's interesting right now?
Yeah, my small Israeli telecom company, Ceragon, reported, and I've been holding that piece of crap for 2 years, waiting for it to develop into a growth story. And I think I'm closer than I ever have been. So we'll see. They were late with a whole new product cycle. They designed a modem and semiconductor system on a chip that is brand new. The industry operates on one from Max Linear that's 11 years old, and you can't possibly have an 11-year-old semiconductor running a telecommunications device today, but that's how the industry operates. Their biggest competitor, Nokia, is selling its business, and they had a comparable business in cellular frequencies that they sold. It was 200 million in revenue, and they had to give it away. They had to pay the acquirer to take it. Okay,
Ouch.
and that's to make the customers happy that have it, and to transition the product line to 6G. So they basically, this company paid $20 million, and they paid them back 40 million to make them profitable this year. So it was nutty, and that uncertainty around Nokia selling this business is causing their European customers to make incoming calls to Theragon, and they have some big orders in India with a product. Their products are inferior to cellular because microwave is line of sight. So who wants to always be in line of sight of an antenna, right? That's crappy stuff. So they finally figured out a way to make a point to multipoint system where you could have a tower and it could transmit in 360 degrees, so in a small town, and you could have 60 different little dishes looking at it in 60 different homes or an apartment complex or a college campus. The difference when it's a little different than when you sell two pieces of equipment, a transmitter and receiver, than when you sell one transmitter and 60 receivers, right? So they're working on this for fixed wireless access. So it's very cheap in many instances. The spectrum is unlicensed, so you don't have to pay anything for it, not billions like you have to pay for cellular. And the equipment is thousands of dollars for the expensive transmitter, and then the receivers are like $200-300. So you can get rural broadband or village broadband for the billions of people in India. They'll never sell in China. They have 80% market share in India. Pretty impressive. So or 65 to 80, somewhere in there. So if they can get this point to multi-point product off the ground, there's another, large growth leg. And finally, they say they're starting to see some edge AI demand. They're working on a data center application for it, but I don't understand. I think you'd always want to use fiber in a data center, not wireless, because fiber is so much more bandwidth. So anyway, Ben, I've turned a lot of 20 baggers into 5 baggers in the last 5 years, and this has been a no bagger. But I'm destined not to turn a 4 bagger into a no bagger. So I'm holding. It's the definition of insanity, doing the same thing and expecting a different
Hey,
outcome.
hey,
But
look, you
I
deserve
think
you deserve to make all the money. 2 years in an Israeli telecom stock that's $2. I mean, like,
Ben,
that's not something that the talking heads are talking about, buddy.
Right. And what has been a tough industry historically.
Yes, I would
But
agree.
the
So
CEO basically, who I've told should retire on a call to his face, to six other people's faces, because he's beaten up. He's been beaten up by this business. He was a reluctant rehire when he got hired 5 years ago. And I said, look, you've been getting the hell beat out of you for 6 years. Why don't you find a younger protege and hand the reins over? You could be COO or whatever you want to do, or chairman of the board. But it's been a brutal industry. He noted on his call that for the first time in 6 years, he could say the industry is meaningfully less competitive than it was over the last his CEO history, which is an interesting thing to say. They haven't shown it in the numbers yet. All they say is we have a lot of RFPs, a lot of proposals. These devices are not sold off the shelf. They're semi-customized for every operator. So they have to go through a 6-9 month trial and then tweak the hardware and then do another confirmation trial for 2 months, and then so it's a year to get an order. But there's a lot of new business on the table. So if they have their 15% growth spurt for 2 or 3 years, the stock will, it went from my cost of 2.5, it hit 6 once. So I had more than a double, but I didn't sell any because I thought it was going to 10. So I'm holding out for 10 on this one, and it might take 2 or 3 years, but I think there's finally light at the end of the tunnel for the industry getting better, enough better for these guys to really make some revenue growth and profits.
okay, well, you know what? We're there in spirit with you, buddy.
There you go.
The last thing I'm going to say is, did you guys see we did on our podcast, we did a thing about SpaceX and kind of the joke that is that IPO. But then we were like, oh, you know what you could do is buy a 1 cent option on Tesla SpaceX merger. Last night it comes out, Elon's starting to float it out there. They're going to try and pull the Solar City move. Like, this is what you guys, when we talk about just the definition of insanity, it is this guy's ability to generate market cap on not much EBITDA. We should all strive to be able to sell stock the way this guy does.
The mind warp field is unbelievable with him, because that is exactly the kind of thing he would do, and he's got the juice to do it. The definition of insanity has been betting against him for ages because he's been full of crap the entire time, and the objective case was, this is insane, you can't just merge these things, what the hell are you talking about? And man, we should all be gifted with that. Sure, I can do that. Kiss my ass. It's.
I
I made a machine that catches rocket ships as they land. Have you done that? It seems pretty cool. Look at that.
it is. Well, that's the thing. It's such a weird dynamic because he deserves credit for making the EV thing a real market in the mainstream. If you guys remember back in the 20 years ago, there was a strong push against. No one wanted electric vehicles. They wanted
because it turns out they're not really environmentally beneficial at all. It's like really good points at the time and now against that technology, and he made it a thing, and made kind of cool cars.
My thinking here is, yesterday I started looking at BYD again. So BYD trades in China, and it's the best car company in the world. 7 times EBITDA. They have a whole factory that's robots. So it's like, oh, they don't tell everyone, oh, we got long Optimus Prime and we're going to be a robot company, whatever. They trade 7 times EBITDA. Buy BYD. Chart looks kind of like something Robert would buy. It's cheap. It's got the technology. Americans don't know about BYDs because there's 100% import tax. But I'm almost thinking I want to buy one just to be the guy driving around LA in a BYD, and just let people know what's actually out there. But if you go anywhere else in the world, these things are all over the place. And in the meantime, Tesla, it's 15 billion of EBITDA trading at 1.6 trillion. And they haven't grown revenue in 3 years. Whatever.
And don't seem particularly interested in it. They're not promising new cars. They're just kind of like, it's
oh yeah, we're not really making new models, new makes. We're just gonna keep trading on 2018 to 2021 hype, and maybe we'll just bring it into SpaceX and have a car, space, Starlink, XAI, 1960s style conglomerate. You know what I mean? Like,
Yeah, and we'll
and
chuck Twitter in there too. Why not? Why the hell not?
oh yeah, why not? Robert, what would you think that could actually change this dynamic we're in? Just last thing we have here of memory stocks and semis, and you've been on the SIMO trade, SIMO, which has been excellent. You pitched that like 2 years ago on the show. You've been long this stuff. What do you think changed this? You were an investor in '99. Like, what would it be? That is it this deal coming up? Is it all these paper? What do you think?
In '99, Intel had one quarter that was light, and they guided down, and the stock market, the Nasdaq opened up down 10% the next day. The Nasdaq, something like that, right? Something like that. And I was long low P and APE old economy portfolio, so I had to wait a lot longer for that to happen. But in this instance, there's one thing that could happen, and and I'm going to pursue the Ed Zitron's case that there's 1/4 to 1/3 of the GPUs that have been sold by um, NVIDIA have not been installed yet, and they're going to start selling another couple million. And that's just because data center delays. It has nothing to do with the companies would have installed them, the hyperscalers, if the data centers would have been built on time. And by the way, as nutty as he is, the only guy to build a world class data center in like 2 or 2.5 years was Elon. Everyone else is taking the 2 to 3 year plan and turning it into 5 or 6 years, right? 4 or 5, 6 years. So there's got to be a quarter where Nvidia comes out and says, I mean, the new product's doing great, and the technology is great, and the customers love it, but because of these data center delays that are now very obvious to people, they can't employ the GPUs. So for 6 months or 3 months, there's going to be a pause in sequential growth, or even a reduction in sequential sales. There has to be something like that out there. If that happens, it's over, right? Just
Yeah.
the first thing that happens is over. Whether it's real or not, whether it's short term or something longer term, we don't know. So that would be one thing, and the other thing would be more of these companies. You and I have been on this move that the reason the industry is so risky is because it's not operating on an economical basis, right? The customers aren't paying anywhere near the price that it costs to deliver. You think you're going to have 6 agents running around doing everything for you? You're going to be paying $5,000 a month for that. And if you want to pay 60 grand a year for 6 agents to do all your shit online while you sleep, you can afford it. God bless you. Okay, but it's not going to be a free. It's a free service to start on a $100 a month subscription model. That's free for most people, and you can use all you want. Well, that's crazy. That's not going to happen. So if it's costing these double or triple to provide the service, and it's being subsidized by burning through hundreds of billions of capital being raised and debt being raised, okay, that's not a sustainable business model. So if what else could cause the issue is if prices for tokens go up to reflect what's necessary to pay for the business, and people see, for now this has gotten way too expensive for me. They lured me in with free, and now they want me to pay $2,000 a project or something like that. That, in my opinion, would also slow down this process, especially if it leads to the Chinese models, which are 1/5 the price, taking market share, right? And there's a big movement to that. So pricing for tokens, as everybody raises prices to cover their costs, their direct costs, I think could cause a problem for the stocks too.
Yeah, I also think the token thing is like people are telling stories about how at Meta and these places they have token boards. How many tokens did you use as a sign of output? But the reality is, as somebody who's like kind of involved with all this stuff, you actually want to like optimized to use less tokens. Like
Yes.
the last time I checked, boys, you want to have high output to input ratios. Like I
Right.
think that's what we were taught how economics work, not like
And the entire
spend.
freaking point of the entire freaking revolution was I can get rid of all the guys that I pay so I can, do this. I'm just replacing them with tokens that I have to buy.
Right. Exactly.
Well, that's right, actually, because if you think about it,
And then I got to
so
spend more time checking the work because I don't have to check the other people's work as much. Right.
yeah, the data centers are capital heavy, and I'm thinking that people in the market do not understand the capital heavy nature of all these businesses now. Like this is something where the 75-80% of the capex is GPUs, and that's a 4 to 6 year useful life. Doesn't work. Okay, like when we talk about we invested in all that fiber, the fiber's still working and still there. Factories, you invest in a factory, it's 20-year useful life. Spending this much money on 4 or 5 year useful life is something I think the market's going to have to figure out. Like, and that is going to be an issue here. This is not capital light, and I don't think people are really realizing what's going on right now. No one cares because these stocks just go up and to the right every day, so there's not questions being asked. But I do think it's Robert. You're probably right. There's going to be one report that shakes the confidence of the market, and then the positioning will go from a one way up to the exit doors. And so,
And I mean, you sound like old man yelling at cloud the second you bring it up, but the charts like microns don't occur in nature. Like that's just not a thing that you see. And when it's not for nothing that people say, that the last time we saw that was during the late 90s in the bubble, and you saw it go up 20% a day. That always ends the same way. And you're right, we're setting up for once they realize the capital intensity that it takes to sort of operate these things. That's a realization along the lines of, what, the internet's growing at a fifth of what we thought it was. Still pretty quick, but that adjustment sort of snapped people out of it. And I think you're right. I mean, it's these aren't businesses that scale just endlessly and kind of have this continuous growth, and we'll have earnings that kind of come back and justify it. And hearing people talk about multiples for these things, it's 6 times forward earnings. It's like, yeah. Are you familiar with the phrase cyclical? The term, just the idea, the concept.
yeah, I think that is actually a great point. Is that and Robert, we've talked about this endlessly. Is that like, DRAM is a bad business. It's a commodity business. Like, and people need to remember that semiconductors are actually cyclical businesses. And when you talk about DRAM, like, oh, it's 14 times, 15 times forward. It's like, well, when you pay a big multiple for peak earnings, you got to remember it's probably cheaper when it's 70 times trailing and it's on trough, right? And so
Yeah.
that's the kind of thing that I think, Jeff, that's a great point that needs to be remembered. Is this is not something where it's like a Home Depot in the 90s where we're paying forward, or Walmart in the 90s we're paying forward multiple because it's growing and it's sustainable. It is a cyclical commodity business that's having a nice moment, So yeah,
That's-
it's heady times, boys. I think we gotta call it though. It is probably time to end the show.
Yeah.
I could talk for hours with you two. It's always fun.
We're
I'm Ben
preaching to the
Bryant,
choir. I don't care. Take it easy, boys.
and as Robert Morrison, we will be back at you tomorrow. This is Wall Street Beats. Later, guys.
Bye. Thanks, guys. Thanks, man.